Hey, this is Jay with Simple City Trading. Thank you for watching the video. I'm going to be showcasing a trading technique that I've developed really over several years. It's the collection of kind of a lot of different ideas, but really my goal was to just do something that was very simple. I found a lot of times when I was trading, I would, at least entering trades, I would get fearful and confused, and so what I realized is I really needed to build something that was mechanical, that would allow me to make decisions with as little input as possible. In other words, once I knew mechanically what I wanted to do, it just became a matter of pushing a button, and it has really helped me to build it like this. And so I am sharing this technique, and I'm just going to try to cover the basics of it. And then what I would like to do is kind of going forward is I'm going to demonstrate this in daily videos and show the setups that happen for that day to really kind of reveal what it looks like and how simple it is. So this can be used for intraday or swing trading, and we'll get into that. So if you're an intraday trader or a longer term trader, you can use this for both techniques. I primarily use it for intraday and swing. I'm not holding anything particularly long, mostly intraday, if at most maybe 3-4 days. But anyway, let's get into it. Here are the standard risk disclosures. Trading is risky and can cause substantial financial loss. It is recommended to trade on a demo account or a paper trading account until you have a proven track record. This is a big one. So trading is very risky. The strategy here, the primary objective is to take advantage of momentum or directional bias in the market, and we can use this on stocks, futures, foreign exchange, cryptocurrency. The examples that I'm going to show today are in the futures markets. This is my preferred market. Forex would probably be my second. Crypto, I would say, is third, even though I don't trade it, but there's a specific reason for that. And it also can work in stocks. Now, the only reason this is the lowest one on the totem pole is just because of the day trading nature of stocks. In other words, the charts stop, or begin at the beginning of the day and end at the end of the day, where futures, forex, and crypto charts, these go 24 hours, and you'll see with the technique why that's important. So I just like these charts better. But anyway, this technique, it utilizes a combination of simple technical indicators and multiple time frames to determine the trend and pinpoint entry levels and exit levels. Okay. I love the idea of simplicity, especially in trading and just in my life in general. But simplicity just makes trading is difficult, and when you can do it simply, the decision making can just become easier. So anyway, these are some quotes that I just kind of Googled and pulled up. Here's one from Albert Einstein. He says, "Make everything as simple as possible, but not any simpler." So get it down to as basic as you can get it, but not any less and not any more. Here's one from Steve Jobs. "Simple can be harder than complex. You have to work hard to get your thinking clean to make it simple. But it's worth it in the end, because once you get there, you can move mountains." Okay, so clear-headedness, clear thinking, simplicity, these are all very important. Trading should be simple, but this does not mean that it is easy. Okay? Now, what's our goal here? My goal with this is to have setups that are clear and easy to see. In other words, no ambiguity whatsoever. When you see a setup come your way, you either there's either something to do or nothing to do. And there should be no second guessing when you see something coming your way, that it's clear and easy to see, and you can make an easy decision based on that. I wanted to build something that was based on repeatable patterns, okay? Something that would be fundamentally sound. In other words, it could stand the test of time. In other words, are these patterns that apply to the market, no matter which market, what time of day, what time of year, volatile, slow, whatever the case may be, is it fundamentally sound? Okay, and that kind of leads into, is it duplicatable? Could you teach it to somebody else? Could you repeat it on a daily basis? And so those are kind of the requirements that I had for this, and we're going to get into it right now. So what I'm doing here is using, how I'm going to demonstrate this is with 2 time frames, okay? And there are variances to this, but to just get the basics of what we're looking at, okay, I'm just using a moving average here, and this is a white line on my chart, and I call this high time frame. Now, high time frame can be a weekly chart, a monthly chart, a daily chart, whatever that is for you. It just depends on what your time frame is, and how long you want to be in these trades. So the longer you want to be in, the higher the time frame, the shorter the shorter the time frame. All right, so here's the basic rules of what we're doing here, what I'm going to demonstrate. We're going to take a high time frame. All right. And the first thing that we want to see happen here is I have what's called a setup bar. Okay, and what this is I want to see price closing above, and this is for a buy example. Okay, and when I say close above, that's the moving average. So this is a bar chart, and what I'm looking for is the first time that price goes above the white line, and you can see that right here. So this chart opens below and ends up closing above, and it looks like this. And an up bar is going to look like this. It's going to have a handle here on the left and then a handle here on the right. And a down bar is going to be the opposite. It's going to have a handle on the left at the top and then close down like this. And so a blue bar is just closing up, a red bar is closing down. Okay? So in this case, the blue bar is closing above the white line, and then that's what I want to see. That's when I'm going to start paying attention. Now, the next bar, okay, I have to wait for this to close above. Once that's done and this bar is closed, I'm going to go to this bar right here, and this is going to be where I'm going to start looking, and I call this time begin. It's kind of, I don't know if that's the right word, but I just call this where we're going to start looking to be a buyer. Okay, and it's going to be right here. So close above, we take the open of the next bar and we start looking for buying opportunities. All right. Now, the final thing that I want to see here is a confirmation, and down here this is my confirmation indicator, and I want the color of this to line up with the idea that I'm of what I'm doing up here. In this case, I'm being a buyer. Okay, so I want to close above, and I want to start looking here, and then I want these bars down here to be blue as well. Okay, to match up with what I'm trying to do here. So once I've got my confirmation, it's okay to start looking for buy opportunities. All right. Now here's the same chart. All I did here is I just kind of magnified the rules here. So same deal here. All I'm looking for is high time frame to close above, in this case above, below for a sell, but right now we're looking at the buy. on my high time frame moving average. That's right here. And then I want the confirmation color to close and agree with the direction. So that's this point right here. Okay. Now here is the same exact thing, but we're just going the other way. Instead of being a buyer, we are going to be a seller, and the rules are exactly the same. So in this case, I want a bar to close below the white line. Once I get that, I'm going to start looking right here, and as long as I have that confirmation red, okay, that's a valid place to start looking for selling opportunities. All right. Now here is a situation where we don't have a buy or sell signal. We have a neutral situation. So in this case, this is that same chart that we've been following in that bullish example where we have our long opportunity here. And we can see the chart continually has closes above the white line. Okay, and so we stay with a bias to the upside. And then our confirmation is just blue, 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 blue. Okay, we're still agreeing here, so we're still in buy mode. And then right here, you'll notice that we get a red bar closed here, and then a red bar open. When your price is closing above the white line, and we get red down here in our confirmation, okay, we're gonna go on the sidelines and we're gonna wait. We're gonna wait until we get our next confirmation, and then we can start to go into a buy situation, at least on this chart. Okay, so hopefully that makes sense. This is a neutral situation. Okay, neutral right through here. All right. Here's the same thing in reverse on a neutral situation. So price is closing below, closing below, closing below, closing below, closing below. Our confirmation is red, red, red until right here we get a blue bar, and so we're going to go ahead and go on the sidelines here for a little bit until we get a new signal on the confirmation, and we'll start to trade that to the downside, at least on this chart. And then you can see here it even goes neutral again, and here as well. Okay. All right. So what I've got here on the left is, this is pretty much the same chart we've already been looking at for our buy signal. So just to recap here we have our close above right there, our time begin here, and our confirmation looks good. So we can go ahead and go to, now we can jump over to this low time frame chart. Okay, and this is our execution chart. So this one gives us our direction. This one gives us our entries. Okay, where do we want to buy and sell? All right, and I'm going to demonstrate that here. So this green vertical line in time is the same as this on my low time frame. So I don't even need to be looking at this chart until this chart gives me a signal. Once it does, my eyeballs are going to go over to this chart, and I'm going to start looking for my rules to get me in, and we're going to get into that here. All right, here is a sell example. So same situation, I've got my close below, here's my time begin, the magenta here, right here, and then what I'm going to do is start looking for sell opportunities when my rules are met over here. Okay. All right, here is an actual what it's going to look like on your low time frame, what the rules look like, our rules of engagement. Okay, so right here is our time begin from our high time frame. Okay, so in this example, I'm only looking for a buy. Sell is not even in the question. Neutral, I mean, sure, I could do nothing. But if we're going to follow a mechanical strategy, when you see your setup, you take your setup. All right. So I want to buy. So here's my rules on my low time frame chart to get me into a trade. The first thing I like to do, I use 12 a.m. as my earliest time I'm going to start looking at my charts for an entry signal. Now I'm in the East Coast in the US, so I'm on New York time. Whatever New York time is for you, you'll have to just figure that out wherever you are. But this is where I start looking. Okay. Now, when I want to buy, I want my white line, and I call this the black box. Okay, just to be kind of silly, black box. Nothing proprietary here. White line, I want to go below the minimum trigger. Okay, and what I mean by that is when the white line goes below this blue shaded area into the black box. That's the first thing I'm looking for when I want to buy. In other words, I want to buy. I know I want to buy, right? But if this line is not below here, I'm not doing anything. Once that line drops below here, I'm looking. Okay, I'm ready. All I'm waiting for now, I know I want to buy. I got my white line into the black box. All I'm doing is now I'm going to my confirmation indicator, and I'm going to wait for a blue close here on the confirmation, and right here is my entry. Right here. Okay, and I'm going to take that long right there. Take that buy. All right. Let's look at a sell example. Here's the same situation in reverse. We're going to wait till 12 a.m. New York time. Now we want to sell, so we want our white line to go into the black box above, right here. So we go out of the shaded area. And the only thing I'm doing now is waiting for my confirmation to go red, and then I'm going to enter right there. So right where this bar opens, that's like the crosshair. And then I'm looking to take that chart down. Okay, what do we have here? Another, okay, this is just a chart that I took to kind of show an example. It's not so perfect, but illustrates the situation. I think when I did this, it was in real time, so I just wanted to show something in real time. So here we have our time begin, and these are the signals that are coming in after we get that buy signal. So we can see here we're going into the black box, into the black box, and again here. And we get our blue line, our blue close here. There's your entry. And then we're getting a blue close here. There's an entry. So the point being not necessarily to take all these trades, but to say, hey, sometimes you get a second opportunity, a third opportunity, maybe a fourth. Maybe you're adding to the position. You know, that's user choice. Let's keep going. Here's our taking profit. Pretty simple. We're assuming we're already in this trade, so we've met our rules. We've got our sell signal here. We are above the black box, in the upper black box here, and then we get a red close right here, we're going to enter on this bar right there. And then all we're doing here, I've got two, all this is I'm just manipulating the time frame here. Just to show you that there's a couple different ways you can take profit. And it really just comes down to what your time frame is. You could do conservative or aggressive. But all we're doing is once we're in that trade, all I'm doing here is I'm waiting for this next blue confirmation to go up. In other words, it's going the opposite of my trade. So I want to sell. Here's my entry. Here's my exit. Okay, pretty straightforward. Or if I wanted to use a more aggressive target, okay, I could use this one here, and that one gets me out right there. Here's just a continuation of the same thing that I just went over. So here we have 12 a.m. New York. We know that we want to buy. We're going to wait until we get into our black box. We're going to wait for our blue confirmation. There's our entry. And we ride this up until we get a red opposing color. And then you can see this one comes in over here. Okay. Sometimes it's working for you, sometimes it's working against you. In this case, we're going to go aggressive. The conservative perform better, but again, that's user options here. Okay, so what I have here is I built an algorithm that is going to demonstrate this and show you what it looks like, just to kind of hammer home the idea of what I'm trying to explain here. So here we go, and I'll talk it through as we go. All right, so let me pause this for a sec. So what I've got going on here is I've got my, okay, this is my high time frame. This is my low time frame. Okay, and I've got marked here the time begin. That's right here. So I know I want to buy from this chart. Now I'm just going to wait for my signal over here. And I'll go ahead and run that. So what I'm waiting for right now is I want my white line to go into this lower black box, and I'm just waiting for that, or in this case the algorithm. All right, so we're dipping in right here. Okay, there it is. There's the buy. So we're coming into the black box here, right in here. Here's our blue close confirmation. There's your entry right there on the open of that bar. Keep it rolling. And then there's my target. Right there. So all I'm waiting for is this color change. Okay. Keep it rolling. There's another entry. We've got black box here. Blue confirmation here. And we get that entry. And there's the exit right there. Let's do a sell example. Same thing going on here. We're going to wait. We want to sell. Here's our high time frame, low time frame. Black box here. Here's the sell. Okay, now this one's going against us a little bit, but here's the thing. We've got that high time frame in our favor. And there's the exit. Using our red bar there. Here's another entry. We've gone into the black box here. Red confirmation down. And there it is. There's the exit on the blue bar here. Okay, here's another sell into the black box. Get our red confirmation. Here's the entry. This one enters a second trade here. All right, there it is. There it is. That's what it looks like. All right. Why a mechanical strategy? I think this is a really big deal. Mark Douglas, if you haven't read his books, I highly recommend them. He was a trading coach, and he's the author of 2 books, The Disciplined Trader and Trading in the Zone. And what he talks about is the idea that when you're starting out trading, you start out mechanically because you need to learn the process of trading, because trading is about execution. And if you've traded for some time, you know that there's a big difference between your analysis and your technical analysis and actually putting that into effect. And it's about execution. It's about taking a trade, not dealing with all the fears and things that go along with being in a trade and managing a trade. And so the idea is that when you start mechanically, you're just your habit developing and process developing and becoming proficient and minimizing errors and things like that. And once you get comfortable with that, you can go into the higher levels. But that's why I really like mechanical, especially if you're a beginning trader. It's just the right way to do it, because analysis and trading are 2 completely different things. All right. So that being said, why mechanical strategy? Again, it's just to have a specific set of rules for engagement, very clear entry signals, very clear exit signals, proper position sizing, trade management, risk management. And so the idea is we just want to perform robotically. When we see a signal, when we see X, we do Y. All right. Just some suggestions here from my over 10 years of trading experience. When you're learning something new or you're just starting out trading, always, always, always start on a demo account, learn a technique, and practice it and learn to execute that technique without errors and without hesitation. Once you can do that on a demo account, you are ready to graduate to a live account. Once you get to the live account, you want to trade the smallest size possible. I don't care if you have $1,000 in your trading account or 100,000. You should be trading small just to get the feeling of what it's like to be in the market. As you build a track record on a small account, you can start to go up. Okay, but this is just to protect you and your trading psychology and your bank account. Very important. Learn one technique and learn to execute it flawlessly. Do not be a jack of all trades and a master of none. This is very, very true in trading because there's just so much going on. If I'm trying to watch 10 different charts and 3 different strategies, I'm just going to be confused. And that's not a healthy thing, especially when you're just trying to learn a mechanical technique, because the idea is that we're just robotic, right? We're not second guessing, we're not over analyzing. We're just entering and exiting based on a predefined set of rules. Okay? And I really like this quote. It says, "I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times." That's Bruce Lee. Love him. Thank thanks for watching. My goal with this is I'm going to do ongoing daily videos just to show the technique. What does the chart look like before the entry? What does it look like after? Was it a winner? Was it a loser? How did we manage that trade? Where did we place our stops? Things like that. So I'm going to go over all that, and I just really wanted to do this initial video to get this out of the way so I could start doing that, and I'm excited about it. And I love to teach. So this is fun for me. I do it anyway. I do it every day. I'm in front of my charts, doing my setups, doing my analysis, reviewing my trades and things like that. So this is just also going to be a way for me to do that on an ongoing basis and bring that out to the public. And so if you have any questions about this, I'm going to use tradethenq@gmail.com, tradethenq@gmail.com. Thanks for watching. Please like and subscribe if you want to see those daily videos. Thank you for watching.